Now we'll discuss the roadmap for applicability of Indian AS. So, Indian accounting standards, as we know, it is applicable to some sort of companies, not to all type of companies. So we'll discuss which type of companies it is applicable to. So initially, MCA has notified the companies uh, in 2015. Here you can see, and accordingly, it has notified 39 Indian accounting standards has laid down, and the transition period for both companies and the non-banking finance companies. Okay, so you can read this and you will understand this concept what I told. So there are like two phases in which it has to be applicable. So that's what they notified. So for the phase one, okay. This is the rules, and it starts from 1st April 2016, first phase. So you read this, and according to this one, phase one, okay. Phase one, first point, it is companies whose equity or debt are listed or in the process of being listed. So this is listed companies, okay. First one is listed A, and B, companies other than those covered in subclass A. Subclass A means it this one. So this is listed other than this. So whatever comes other than the first is it comes here, okay. So this is unlisted, we take it as unlisted, and including this unlisted and listed, so holding of the company, subsidiary, joint venture or associate companies of companies covered under both these clauses will comes under this phase 1. So which are the companies? Like all the listed company and unlisted company? No. So they have mentioned it clearly. Having net worth of 500 rupee. Okay. Both. Both. Okay. So listed or unlisted, whether it may be listed or unlisted, if it has crossed 500 crore net worth, so it is applicable. If it is applicable to that company, their holding and their subsidiary, their joint venture and associate companies will also get covered under this section, okay, in the phase 1. So we'll go through the ICAI book and we'll explain it clearly. So leave about this, I'll explain it to you later. And the phase 2, okay. So in the phase 2, and one thing, this one is applicable from financial year 2016, okay, 2016. Phase 1 is from 2016, it starts from April 1st 2016. And the phase 2, um, companies under phase 2, the same explanations, it comes under clause A, that is companies whose equity or debt, you can read this, and it is listed, okay, having net worth of less than 500 crore and less than 500 crore. It means like even if it is less than 500 crore, it is applicable. What does it trying to tell you? See, in the phase 2, it is clearly notified that if it crosses 500 crore of net worth, it is applicable. Here they are trying to tell even if it is less than 500 crore, it is applicable. So we have to understand for all listed entities it is applicable, okay. So in the phase 2, all the listed entities, and for the unlisted companies, those are not covered in the subclass A, so that is unlisted company, as you can see. So having net worth of rupees 250 crore or more, so they have decreased the value or this limit of unlisted companies to 250 crore. If it is more than 250 crore, it is applicable, and the same comes here, okay, holding, subsidiary, joint venture, everything. Yeah. Yeah, so until here we have finished. I hope you understood, and leave this part, it's not relevant for the examination, so it's better we leave it. So we'll understand from here, okay. So key matters in transition. So the comparative financial information, all companies applying Indian AS are required to present comparative information as per India AS for 1 year. So whenever it starts, see, whenever the company starts, whether it may be from 2017, 18, 19, or however it may be, it has to comply with one more financial statements which is 1 year before. So the opening balance sheet should also be prepared. Okay, so let's see the example, you will understand what I'm trying to tell you. A company adopted NDIS from 1st April 2014 for its accounting period 2014-15. Okay, so hence it will be required to prepare its first Ind AS financial statements for the year 14-15 with comparatives for the financial year 2013 and 14. Okay, and its date of transition to Ind AS will be considered as 1st April 2013 itself. Okay, so for the preparation of 14-15, we have to prepare the last year financial statements also in according to Ind AS, so that it is easy to compare. It is comparable. Okay, comparative financial information, that is the first point. And Ind AS applicability, the second point. So it says that if you are following Ind AS, you have to finish the financial statements by the year end. That is, if you have started in 1st April, you have to finish on or before 31st March of that financial year. Okay, so if you read this, you will understand this. You can pause here and read it. And consistent application of Ind AS if once applied. Okay, so if a company voluntarily or mandatorily, if once applied the Ind AS, it has to continuously consistently apply that accounting standard without failing. Okay, there's no point of leaving it again. India's applicability for Indian group companies. So here I'll explain you with the flowchart. So if X is our company, Ind AS is applicable to this company and its holding. Okay, here it has stated its holding, its subsidiary, its associate, and its what is this, joint venture. Okay, you got it. So all these companies it is applicable. And for overseas groups, this is the catch here. Yeah, for India is applicability for overseas group companies. Okay, if it like, so for Indian accounting standards applicability for overseas group companies, it does mean like for the companies. See, here is our company. It India is applicable to this company, and its holding, its joint venture, subsidiary, and uh, associate companies are from other countries. Okay, it is incorporated in some other countries, not in India. In that case, it says this. See, if in that case, these companies, all these companies who have incorporated in other country, can follow the accounting rules as per their jurisdiction. Their jurisdiction means it can follow their own country rules of preparation of financial statements. Okay, it doesn't need to require to comply with the Indian accounting standards. But still, this company has to prepare its consolidated financial statements in according with Indian accounting standards. Got it? So we'll come to the sixth point: Indian AS applicability for standalone and consolidated financial statements. If once Indian AS is required to be complied, if a company needs to comply with the Indian AS, both its standalone and consolidated financial statements must be prepared in accordance with Ind AS only. So, for example, if a company is a part of Indian AS applicability, it has to prepare both, if it is applicable, both standalone and consolidated in accordance with Ind AS only. Okay. So we'll discuss the next part, that is calculation of net worth. So we have told now in the phase 1 and phase 2 we have to comply with the account Indian AS if it has crosses some 500 crore, 250 crore. So what is that net worth? How do we find the net worth? What's the calculation? Okay. So you can read, you will understand, it's so easy. For your convenience I made this. Just this is, so for calculation, they will give the balance sheet like this, liabilities and assets. So in that we have to calculate using this one. Okay, so first one is paid up share capital and security premium and all the reserves. Okay, whatever the reserves they put out of profits they have earned, so we have to add that, and we have to deduct the losses and deferred expenditure and miscellaneous expenses. So you will get to know all this when you do a problem. Okay, so you have to deduct all this. From this we'll get the net worth of the company. Got it? We'll do some practical questions so that you will get to know this entire concept so clearly. We'll start with the illustration one. So the following is a snapshot of audited balance sheet of company A. As on 31st March 2014, company A equity shares are listed in Bombay Stock Exchange. So from this we have to note that it is a listed company. Okay, and equity, so they have given all the liabilities. Equity share capital, you can see the formula here. Paid up share capital and securities premium, and it is securities premium here, and general reserve and revaluation reserve. So reserves is there. One thing I've forgotten. So in this reserves, so we should not include reserves created out of revaluation of assets and rate back of depreciation and amalgamation. Okay, so these are not the profits we have earned in the process of business, so we should not include this. Okay, you have to remember this. I forgot to tell you there. So paid up share capital plus securities premium plus general reserve, so we should not include this. Okay, no minus, no plus, nothing. And we'll come to this page. We still have profit 75 lakh, what, 75 crore it is, and liabilities 160. Okay, so the total is 785. And we'll come to the assets. So for assets we have to deduct the losses, any deferred expenditure, miscellaneous expenditure. Okay, here you can find the miscellaneous expenditure not written off, so and then nothing else. So we'll do that calculation of net worth. So equity share capital 160, securities premium, general reserve. So then the profit and loss we have given, some profit, and that too we'll add it. All this will deduct just one item which they have given is miscellaneous expenditure not written off. If we deduct that, it comes to 505 crore. Okay, so see, they have given here revaluation reserve would be not included in the calculation of network as per definition mentioned in 257 of company sec blah blah blah. Okay, yeah, the company is listed company and it does not meet the net worth threshold of 500 crore, hence it would be covered under phase 1 threshold. So it has crossed 500 crore, that is 505, so it is applicable. So for this company it is applicable from March 1st 2016. Okay. Hmm. And they have given one more question. As per the roadmap, which phase company A falls into? It is phase 1 itself. Yeah, no, it has crossed the 500 crore limit, so it falls under phase 1. Will your answer change if a company A is an unlisted company? If it is an unlisted company, okay, we'll see that answer. Even if company A is an unlisted company, as company said, A's net worth is more than 500 crore, it would be covered under phase 1 of roadmap, and hence Ind AS would be applicable for the accounting periods beginning on or after April 1st 2016. Okay, so the first one is completed, and the second one, let's say in illustration 1 the balance sheet of balance of profit and loss account is negative. If it is negative, we'll deduct it now, so we'll get this amount. This 505 minus 375 minus miscellaneous will get the figure of 55 crore. So it doesn't cross any 500 crore limit, so hence the company is listed company, it will irrespective be covered under phase 2, because phase 2 it covers all the listed companies na. Yeah, that's the reason. So irrespective of the limit or net worth, it will be covered under phase 2. It won't cover in under phase 1 because it hasn't crossed 500 crore limit. Okay, yeah, and these are basic, you can read and understand it, the question answer. So we'll go to the illustration 3 now. Illustration 3 is entirely different from 1 and 2. They have given one more example, the net worth of the company, an unlisted company. They have specifically given it is an unlisted company, was 600 crore as on 31st March 2014. So this is the date of cutoff. Okay, it is notified that after 31st March 2014, this is the date they have mentioned. From this date we have to consider the net worth of any company. Okay, however, due to losses incurred in financial, so the next financial year, the losses has incurred and the company's net worth is fallen to 400 crore. Okay, so from when company B shall apply Ind AS? See the here, you can consider the 400 crores. No, you can't, because first initially it was 600 crore. Once it crossed that 600 500 crore on 31st March 2014, there is no looking back. Okay, the answer is also given in a more professional way. Here the company's net worth uh, as on cutoff date was greater than 500 crore. Okay, which suggests that it should be covered under phase 1 of the roadmap. If it is covered under the phase 1, if it comes under India AS once, there's no going back. So it says the same, even if the next year the net worth falls to 400 crore below 500 crore, it doesn't matter. Once it is applicable, it is applicable for lifetime. Okay, so you can read it and you can get the full idea. And we'll go to the fourth illustration. Even this illustration 4 is also same, and initially it was 400 crore and then it increased to 600 crore. So in this solution it has given we have to consider that 500 crore above figure, which is 600 crore. So we have to consider from that date, so it's applicable from 1st April. You can read the question and answer, it's quite easy. And we'll move on to the next illustration that they have given. So we'll discuss this illustration 5. So they have given the limits. You can pause this video and read it once. So they have given this one. Okay, A is all three companies or unlisted company. Okay, all three are unlisted, and A is the holding company. It has 660 crore of net worth, and B is 600 crore. It is a subsidiary of A, so it is subsidiary of A, and C, it is subsidiary of B. Okay, so it has 150 crore. So as per phase 1, if it both may be listed or unlisted, if it crosses 500 crore of net worth, it is applicable. Okay, so for B it is applicable, right? So under the rule, like if one company is applicable, their holding, their subsidiary, their associate, and their joint venture should also comply with the Ind AS. That we have seen. I'll show you that rule also. Here you can see in the first page itself, holding, subsidiary, joint venture or associate companies are covered under subsection clause A and subclause B as mentioned above. Okay, so by considering that rule, the both, if B is if B comes under Ind AS, both A, that is holding, and C, that is subsidiary of B, should also be applicable. So hence Ind AS would be applicable to all these three companies, that is company A, B and C. Okay, you got it right. And one last time we'll discuss this illustration 6 without even seeing the answer. So they have given the company D and subsidiaries is E and H, and F is a subsidiary of E, and G is associate of E. Okay, so we can draw something like this. Okay, These both are subsidiaries of this, and this one is subsidiary and this one is associate. Okay, and this is the subsidiary of this, so this company is not related to this. No. So this is the figure we are drawing, we draw it. Okay, so we can read in the question, all the companies in the above structure are unlisted companies. So all these are unlisted companies, and the net worth of the company E, so this one is 300 crore, and net worth of all other companies is below 250 crore. It won't even come under phase 2. Okay, so if it is 300 crore, its holding and its subsidiary and its associate, all these companies, it will be applicable, the Ind AS. Okay, so because of this, all three will come under Ind AS applicability of phase 2. Okay, so and these two, it's not mandatory for these two. This is the answer. If they want, they can voluntarily do the accounting according to Ind AS, but it's not mandatory. This is the answer. You can go through the answer once. It's so lengthy, but you will find it more informative and understandable. And when it comes to the illustration 7, and illustration 7 is like it is one more type of question. And here ABC in case incorporated in a foreign company has net worth of 700 crore. It doesn't matter if it is 700 crore or 70 crore, because it is incorporated in outside India, it's not in India, so it's not applicable. And X, it's subsidiary, and Y is subsidiary which has 600 crore X ka net worth, and Y has 150 crore of net worth. So in this question I'll tell you, so X with 600 crore, it is applicable, it comes under Ind AS accounting rule. So and for ABC Inc, which is holding of X, it is not applicable because it's not even an Indian company. It doesn't even comes under Companies Act 2013, so it's not applicable. And if it is not applicable for this and these two, because it's not even related to here, this X, because of the rules that they have given. So for Y with 150 crore, it need not to be followed the Ind AS. That's the answer. You can read and go through once. It's so easy. Thank you.